632. I don't see any attendees. Do you?
I saw it through. Oh, I think it takes a sec. Yeah.
John Heiler, can you change his phone number? I see him in there now.
Do you want me to promote him to panelist too?
Yes, that's okay. I think he's just calling in, but
it might be tricky on I did just send the push to promote to panelist, but he probably needs to like accept it, which on a phone I'm not. Oh, there you go. He's gone.
All right, how's that?
There you are.
perfect.
Okay, great, sorry. I made it, plane came in early.
Thank you, John, for joining us. We appreciate it.
You got it.
A lot of
And we
wind
have,
out there.
We also have Jay Michella and Sean Monahan who are in the public side for in case there's any kind of questions with the vote. We'll open their mics if there's any questions.
So you need me to wait?
I do. I need either Navjeet or Jeff to join.
Okay.
That's okay. Felt like the old days when we were in the KBL. I had to borrow a laptop because this laptop decided 2 minutes ago that it was going to do updates. And I was like,
Of course it is.
right now.
Of course it is.
That used to happen to me all the time in those meetings. In the middle of the meeting, it would just pop up and start updating.
And we have
Right.
Navjeet.
Pamela, we have Najit. I think we can start, right?
Sorry.
No, no worries. All right. Welcome everyone on a windy Boston day. It feels like -20. That's how windy it is. I'll start with our opening statement. The trustees of the Boston Public Library reaffirm our commitment to racial equity and to principles of diversity, equity, and inclusion more broadly. The library is formally committed to becoming an anti-racist organization in response to systemic racism, inequity, and injustice prevalent in our society. We acknowledge also that the Boston Public Library Central Library stands on land that was once a water-based ecosystem, providing sustenance to the indigenous Massachusetts people, and it's a place which has long served as a site of meeting and exchange among nations. We are committed to land acknowledgements for all locations at which we operate. We reaffirm this commitment to set the context for our planning, deliberations, and public engagement so they all take place from the spirit of welcome, respect, found in our motto, free to all. Welcome, everyone. Can I get a motion to approve our minutes? And actually, our agenda, it's a little longer than that. So we have approval of the minutes now. We have NEPC doing a report out, a quick summary on gift reporting. We have a contract to approve, a deferment to a request, and discussion around policy. So we are stopping at, what did you say, 4:45? You're muted. You're muted and talking to yourself there.
Sorry, I didn't realize that. As soon as if John or any one of the trustees leave, we won't have quorum. So I just wanted to let everyone know that. I just need to know if someone jumps off.
Well,
Unless Jeff joins us, then we should be okay.
I'm coming from the airport. I've been here for at least an hour, so I'm good.
Yeah. So about 5 o'clock. So probably about 10 of 5 is when we would I'll give you the warning if we're running late. But can I do a roll call before you do anything, Evelyn?
Yes, we'll do a roll call.
Okay. Arana Ortiz,
Yes.
Baal,
Here.
Heiler.
Here.
Jeff is not on, right? Yes,
Hawkins is on. He just
Jeff,
come
we're
in.
doing roll call. Can you just acknowledge? He just joined.
Here.
Thank
Late.
you.
Present.
David Leonard
Yes, here.
and Mike Rush is not, so he's the only one that's absent. We have a quorum.
All right, there we go. All right. Can I get a motion for the approval of the minutes, please?
So moved.
Second.
Second, all in favor?
Aye.
Aye.
Any abstentions? Any no's? Okay, we move on. Sebastian, floor is all yours.
All right. Hi, everyone. It is a windy day. It's cold. Couple things for you today that we'll talk about. One, obviously, a performance update. Things stand very well with the endowment, so returns have been very strong this year, even with a little bit of a pullback in October. November has more than offset any losses that we would have seen during the month. So the numbers we have in the book are through the end of September, but once we have October, we'll share those with you. One due diligence event for one of your managers, UBS, we'll talk about in a moment, and an actionable item there, as I think, given the severity of some of the changes, would be recommending to issue a search for the manager. But where we wanted to start was with NEPC, so due diligence events. On the following slide, we have just a quick highlight of it's my slide number 2. There it is, slide 5 on the deck here. A quick update on NEPC as a firm, as a whole. About 2 weeks ago, we announced that Hightower Advisors, which is a leading wealth advisor based out of Chicago, purchased a majority stake, a passive stake in NEPC, purchasing approximately 80% of the firm. In a transaction that was really born out of opportunity. Hightower, as I mentioned, is very focused on the wealth management RIA space, and that's really where their core competencies lie, their experience lies, their focus is really serving the high net worth space, the RIA space, individuals, etc. One of the things that we've seen evolve over time is that individuals in that space have been looking for opportunities outside of traditional investments, i.e. alternatives, private markets, things that aren't readily available in the universe today. They approached us some time ago just to walk us through the opportunity that they were seeing. And as you can imagine, as consultants and analysts, it took us a while to get our heads wrapped around it, but it became clear to see that as we think about growth and where future growth comes from, this is one of the largest pools of assets that's available to advisors in the country. One of our core competencies is research, is looking for great opportunities to bring to our clients, especially in alternatives. So the complementary nature of those two things really brought our businesses together. And one of the things I do want to make sure that I point out here is what this is versus what this is not. This is a partnership between our two firms, and it is a passive investment, meaning that you should see no changes. NEPC remains NEPC. We remain autonomous. We retain all of the day-to-day oversight of our firm. As part of this transaction, all of our employees participate in the transaction. So from the most junior person to the most senior person, our goal is to keep everyone in place. So we're not looking to eliminate, we're not looking to consolidate. There's no synergy play here where we'll be melding systems or things like that, simply because our business lines are so different. They open the door to a great opportunity for us. We open the door through our research to something that they simply can't put together on their own today. So on a go-forward basis, we'll be working predominantly with Hightower. The goal is not to work with all of their advisors, with all of their clients. It's with Hightower and through Hightower on providing them research capabilities that they don't have in-house today. This will allow them to focus on their core competencies. And for us, it allows us to reinvest in ourselves, which ultimately benefits our clients and our firm. So we're investing in ourselves, investing in our system, and what we bring to you on a go-forward basis should be that much better for it. So the transaction closes right at the beginning of 2025, but we did want to bring this to you. And I joked that a due diligence event on NEPC, because if we had this happen with any of our money managers, the likelihood is we'd come in and say we're placing them on watch. We're placing ourselves on watch. The point of this is that we want to prove to you that you will see no change. The point of this is to show you that the team, the firm that you've worked with for so many years really remains the same for you on a go-forward basis. I'm not going anywhere unless you want me to leave.
Yes. No, Sebastian, a quick question for me. Is this a liquidity event for some of the senior partners? Do you see some exits coming up? senior management level, or are they locked in for years?
Everyone, we're all locked in, John. So depending on sort of your seniority in the firm, it's anywhere from 3 to 5 years. The
Okay.
majority will tell you we weren't going anywhere anyhow. You may see some retirements that were pre-planned anyway. We do ask any partner who's seeking retirement to give us at least a year's worth of advance notice. So there were some that were pre-planned in that way. But as far as someone saying that I'm done with my day-to-day as part of this, that's not the case.
Okay. Yeah, I mean, I could see why this is happening with the model business portfolios. High net worth and high tower is massive now and gets you into the retail space. So I guess it makes business sense. My watch will be on move exits to keep consistency to NEPC going forward. And that's what you always do when you see an 80% passive owner. 80% is a lot to be passive over. So that's what I would keep an eye open to the committee. That's all.
Yeah.
Things are changing.
And I think that's the valid concern, right? It's the onus is on us to prove that everything we've brought to you continues. Nothing gets watered down, nothing gets diluted in any way as part of this process. And you don't really see an impact at all in terms of the servicing or the services that you receive.
Thank you.
Absolutely. Any questions on that? I know it's sort of it's a bigger change than anything we've brought to you before, NEPC wise. So I just want to make sure if there are questions, I'm happy to answer.
No, I'll guess you'll be in our watch.
Yeah. I place myself on
'Cause,
watch.
I mean, you're for someone who has gone through so many acquisitions, that's the song and dance of every initial, and then things change later. So you'll be in the watch.
Yep, I think that's more than fair. Okay. So with that, just turning to the portfolio itself, if we flip forward 2 slides there we go, slide 7. Just a high-level summary of performance for the fund. So as I mentioned, good, strong returns on an absolute basis here, about 10.5% year to date. This is through September, a little bit north of 20% for the 1-year period through September. I'm sorry if I said December, but through September. Really, if you're thinking about what has driven some of the difference in results relative to the benchmark, I can really point it to 2 things. One is exposure to the US, and 2 was exposure to Mag 7, especially over the last 12-month period. Mag 7 made up about 30% of the US market and about 20% of the global market, but drove the predominance of returns in those markets over this trailing period. So any exposure away from these 7 names, I guess it's now Mag 6, but any exposure away from these names was a headwind for results over that time period. What's interesting is starting in July of this past year of summer, you started to see a little bit of divergence between the names, and you've seen the breadth of the market, or where we're seeing some returns from expand beyond those handful of stocks. So being a bit more diversified has actually been quite beneficial. And when we think about your portfolio itself, we're not entirely just in the S&P 500. We're not entirely just in growth names. We do have value names. We have different approaches because we think over the long term, this is the structure that does lead to more successful outcomes. And if you look at the 5 and the 10-year performance figures, you'll see just that pretty handsome outperformance in terms of both absolute and relative terms. In terms of the value of the fund, we finished off September with approximately $71 million, and that does include the spend draw from earlier this calendar year, but last fiscal. So we've seen nice investment earning gains overall for the calendar year to date. And then just an update in terms of new fundings generation. The global equity manager that was selected was funded, and they've come off the initial funding to a very, very strong start. So if we go to the next page, you can actually see the detail there, but very good performance throughout. Up and down that year-to-date column, which is the calendar year-to-date, I mentioned generation, so they were funded right at the beginning of July, up about 9.6% there versus 6.6 for the benchmark. But overall, good results. The one manager that may stand out a little bit with softer performance, or the two managers, and I'll touch on Halo in a second. Impacts is a small mid-cap global equity strategy, so they are focused more on the environmental aspects, so things like alternative energies, clean water, etc. Some of those areas where they overweight, particularly the industrial area, struggled a bit, and the fact that they are small and mid cap, where the benchmark is all cap in nature, having virtually none of the Mag 7 exposure created headwinds relative to that benchmark. But again, overall, if you look at the performance since inception, good, strong, absolute returns there.
Yeah, how is it done against the Russell?
The FTSE Russell?
Yeah,
Against the FTSE Russell, I don't have it on the screen here, but let me just, I have it separately on my other screen here.
I mean, one of the challenges you have is, you know, if and how much do they invest internationally in that mid cap? You know,
So if you look at it, if the ACWI is about 60% US and 40% outside of the US, that's generally speaking what you'll see here. It's plus or minus, but about 40 or 45% of this fund is going to be outside of the US.
yeah, and I guess the debate for the board is we all want to be environmentally. This is a challenge in the U.S. Sebastian may want to touch on it. It's a chunk of our assets. It's good, but this has been a really underperforming sector, and it doesn't look like anything's going to be changing, especially under Trump. And there's a lot of pressure on these stocks. So, I'm all for impact investing. But we also have to do a fiduciary monitoring of our performance, and I just want to make sure that we're all good with that. That we know this sector may underperform for a while, and with all the budget and financial pieces, that's something we want to continue to look at. And Sebastian, if you can give us some insight on that. But ESG and impact investing has been under pressure, especially in the United States.
Yeah, that's right. And you mentioned the results of the election. This is clearly not an emphasis for the incoming administration, so it could certainly have headwinds from that perspective. Where it could have tailwinds is, some of the moves here from a deregulation perspective, from lower taxes, et cetera, could spurn some tailwinds for the smaller mid-cap exposure that they have in this portfolio, which have also experienced a little bit of their own headwinds as well with a rising rate environment. So we do have to take both of those into account. But John, to your point overall, I think the incoming administration has made it pretty clear that their focus is elsewhere and not necessarily on a strategy like this. For the endowment, this is a long-term pool of assets. So, the willingness to keep with this type of strategy through what could be a little bit of a choppy environment, I think is prudent. But I think, we have to be mindful that there may be some headwinds in the near term.
And then just to follow up along that, with some of the plans in place, the big debate is, do we see inflationary pressures come back with the policies that the administration, the Trump administration may start putting in place with spending and tax cuts and just the overall tariff situation? And does that give you any concern over the next few years with that effect on some of the things we have in our portfolio?
To varying degrees, yes. Right. I mean, some of the tariffs that were put into place were maintained. So net new tariffs might be marginal on what's already in place. And some of the policy changes, the tax regulation regime, those could be certainly inflationary, but they're also pro-growth. So you're balancing those two things out. Again, it's really a short-term versus long-term question. I think if you're looking at the markets as a whole, the equity markets are sort of ready to rip roar, and so been a risk on trade. So maintaining that exposure makes sense. Bond markets have been more pricing for a slightly higher inflationary environment because of what we saw the first term and what's been spoken about what to expect this term. So it's really a balancing act. I think for us, given the structure of this portfolio and given what could be, diversification is key. And I know this is sort of the consulting answer, or what do you want to do? You want to be diversified, of course, but what are areas that could benefit from this type of environment? Certainly small caps could benefit from this type of environment. We have exposure there. Inflation sensitive assets. So within PIMCO, the real assets fund that we have with them, or the all asset fund that we have with them, should benefit as there is a correlation to inflationary assets there. What could perform better than other areas is more US centric type of exposure. I just think it's more of a look inward type of an approach with this administration versus look outward. So I think those are the things we just have to be mindful of, and thinking about that to what we have in the fund today. But I think on the whole, structurally, I'm not sure I'd look at a strategy change in terms of what the best what we should be doing strategically. From an implementation perspective, it certainly makes sense taking a look at some of the holdings. So to your point about impacts, it's one that's performed well, but could it have headwinds? Yes. To UBS, which is one we want to actually review and create a search on. Could that one feel a little bit of pain? Potentially. It all depends on ultimately what the policy is towards tariffs, what the policy is towards trades, and which countries would be targeted. And really what their retaliation would be on that as well. But, is a concentrated emerging markets manager the right opportunity set today, or should we do something a little bit more systematic, something more broad-based that's less reliant on any one country? I think the latter is probably the right answer on a go-forward basis. So it's a long-winded response, John, but to your point, I think strategically, I'm not sure we'd be looking to make many changes. So from a policy perspective, but we would want to make sure that from an implementation perspective, i.e. how we're actually investing the dollars or with whom we're investing the dollars, that's one where I think those are the right questions to ask.
Okay, well, if for what it's worth, I like the way you positioned it. I do think those two managers are just because of what the view may be like over the next 2, 3, 4 years and the challenges we face, but it's a long-term portfolio, but we do use this to fund operations. So taking that into account, what you have, yeah, I'll be interested in what you guys, what NEPC decides on, if there should be any changes on the allocation going forward. So I think it was a good answer, Sebastian. Thank you. Well, and by the way, it is complicated. Only going to get more complicated. So thanks.
Yeah. It's trying to fit a lot into 4 days worth of getting clearer understanding of what may happen. Yep. But that said, so on UBS, this is our emerging markets exposure. If you kind of think back when this fund was selected, we looked at a number of different options, and one of the reasons that this fund was selected is, one, it had a very good long-term track record, a very seasoned team, a team that was based out of Asia, where if you look at the emerging markets today, the vast majority of the index is Asia-based. And it had a team that had very strong stock selection which in a concentrated strategy like this, so think 30 name type portfolio, stock selection is going to drive results. Fast forward to today, the strategy has lost some assets, so they're down to about $5.5 billion in AUM today in the strategy, which is still significant. But high watermark was closer to 10 or 12 billion about 3 years ago. Performance has struggled, which has largely been due to stock selection in the space. And the team who is in, the gentleman who was the architect of the strategy retired about 2 or 3 years ago. And the team who's replaced him is following the same approach, and it's one that's been in place for a while. But they're having a little bit of a coming to Jesus moment, understanding that performance has struggled, that flows have been negative, and they want to look at adjusting how they approach things. So not wholesale changes to the process, but adjusting how they look at opportunities on a go-forward basis. So you heard me mention the fact that the majority of the benchmark is now focused around the Asian region. So they want to make sure they have a team that has the experience in that region, and that has the know-how to invest in that region on a go-forward basis. So there are some changes from that front. This was a bottom-up strategy, but I think there's a lot of macro headwinds that have happened in emerging markets. So part of the process is to look at the top-down as well, and how that impacts the individual countries that you're investing in and the regions you're investing in, and what
Yes,
that.
yeah, Sebastian, along those lines, how much did the strength of the dollar and the rate environment affect this portfolio? More so than other competitors, or was it really stock selection?
No, for this, it's actually been stock selection, and it's not. This is the interesting part. It's not just to UBS being a concentrated manager. Actually, other managers of this ilk have had similar headwinds here. Part of it certainly is the dollar. Part of it is the rate environment, but part of it is also where you were or where you weren't investing. If you were investing in China for the majority of the last 12 months or overweight China, with the exception of the last couple of weeks of September and into October, that was a huge headwind. If you were underweight India during that period, that was also a huge headwind, because India has been reaping the benefits of growth over the last same period. So it's really been a combination of things, John. But what has been interesting, there's been a commonality amongst more concentrated strategies that they've seen a little bit more of a headwind than the broader based counterparts. It's sort of a question whether this is a structural issue or whether it's just simply the current market environment is such that it's become very difficult to be a very, very concentrated stock picking type portfolio in emerging markets today.
Okay, so this is the one where if we're going to look at strategically reallocating for the next few years, do we want to be in emerging markets with some of the things that are going on at a macro level? Or is it better to still diversify, but just find maybe a better stock selecting manager? Historically, I've found people that have tried to change their stripes. It's been a real challenge. I'd be concerned on that.
And that's exactly right. So this is a process that's going to take some time to fully play out in this portfolio. So I think at this time it does make sense just to look at other options. We don't want to call completely eliminating, because when you look at emerging markets, it's not just, although Asia makes a good amount of it, you have other areas of the globe that are still seeing pretty good growth and good demographic trends. Again, taking a look at what happened in the previous administration, et cetera, there were winners and losers from some of the shifts that came out. And I think those come into play here. So it's not, I don't think we come in and say, let's eliminate emerging markets. I think we come into 2025 and say, let's look at the right exposure and weight there. But I think the priority for us would be, let's take a look at the implementation now. So we would recommend reviewing managers to replace UBS.
Great, thank you.
Are they our only manager that has a specialty in our portfolio for emerging markets?
Ernest will have a little bit of exposure to emerging markets as part of their broader mandate, their international equity. But as far as just pure play emerging market exposure, yes, UBS is the only manager in the portfolio. That's it. Dave, you might have frozen. Didn't like my response. But yeah, they are the only emerging markets exposure that we have that's direct. I don't know, David, did you hear the response?
Sorry, my Zoom decided to go out and in as you were answering, so I lost your entire answer.
No, what I was saying is that as far as just pure play direct emerging markets, yes, they are the only ones. Ernest and some others may have some ancillary exposure that they have as part of their process, but largely speaking, it would be an additive versus the core part of their allocation.
Great, thank you.
Sebastian, what does that look like in terms of time, winding down? Like, how do you think about that?
So running a search or coming back to you with names should be relatively quick. So that's not a problem. Obviously, we want to be mindful that we are heading into year end here, and schedules become a little bit tight. So if you're asking, do we need to do this before year end? The short answer is no. This can be something that we do in very early 2025 and just do it as part of the asset allocation process and all at once. But are you asking if would we want to wait any longer than that? I don't think we should. I think at this point, let's do it in that time frame. But is it so pressing that we have to do it in the next 6 weeks? Likely not.
Okay, thank you.
So that's the recommendation. There are some market slides behind us. I think some of what we have in there we've kind of incorporated into the commentary around the portfolio today. Obviously, there's more to come. We'll have much more for you early on. So as you recall, usually at the start of every year, we have an internal investment offsite, and it's at that offsite that we take into account all that's transpired and what that means for us on a go-forward basis. So we're able to really decipher and try to bring to you kind of the opportunities, the risks, and the areas where we think we should be prioritizing. As I mentioned, I think for the fund here, we are longer term investors. So I think the more total return approach for us makes sense. But there could be tweaks within where we de-emphasize certain areas or adjust exposure in others that may warrant discussion. But I think as part of that, it would be just looking at options around other managers within emerging markets.
All right, any more questions for Sebastian? No?
No,
All
nice
right.
job.
Thank
Thank
you.
you.
More to come next year.
Yes.
Yes.
And I think congratulations are in order to a certain extent, but we will, as Evelyn said, keep an eye on you guys. 80% passive always concerns me, as Evelyn mentioned. That's a big passive friend.
We're always available if questions come up on any of this post.
You got it. I know you are. I'm just having some fun. So good luck with it.
I know. It's an exciting time. I know it's a little bit of a change for sure. But like I said, if you ever feel that anything's changed from a service perspective or anything that you receive from us or from me, I am all ears to hearing that feedback. So hopefully I don't get those calls. But if I do, I'll take that and make sure that any changes that need to happen do occur.
Oh, hey, I'm sorry. One last question. Is there going to be additional capital for you guys to invest in systems and research? Hightower does have maybe some deeper pockets. Are they looking at trying to strengthen you guys even more? Part of this initiative?
Through the growth potential, eventually, yes, as far as an initial outlay of some sort to support anything that's been lacking, it's not necessarily necessary.
Okay.
So
Great.
I guess the one thing I didn't mention, one of the questions that we've gotten is, did we need to sell? Like, was there some urgency here? And, we weren't looking actively for a buyer or anything like that. I mean, we periodically do inbound requests to talk about opportunities. And generally speaking, they've historically not really moved anywhere. But this one, as conversation started to progress, it was one that really opened our eyes to, this could be something that's quite interesting, which is the reason we pursued.
Great. Thank you.
Absolutely.
Hey, Sebastian, do you have a couple of slides that you want to go through for the next, 5 minutes or so? Or do you want folks to just look at these at their leisure and send any questions? Up to you.
I can talk for another 5 minutes.
Okay.
It's a problem.
Go.
No, so you know what? On the following slides, I think to bring it all home, right? So John, you're asking questions about longer term. So we do have to balance longer term with what's happening today, right? So I know the election's relatively fresh in people's minds and kind of the thoughts about what's next. We still have to kind of look at, all right, well, we still have this quarter to get through and then the next quarter and the next couple of years, et cetera. So from a positioning perspective, one thing you did not see me come to you today on was any kind of rebalancing recommendation. We do think that we're in a pretty good spot from a positioning perspective. because of some of the rebalancing that we've done earlier, because of the balance that we've seen in returns. So today we are slightly overweight US equities relative to our target. So it's a position that we're quite happy with. We are slightly overweight or tilted towards the S&P. So if you recall, we have the S&P exposure through the index fund, and then we have value exposure through Diamond Hill, and that's sort of core value, if you will, but definitely tilts value. And what that does for us is it allows us to de-emphasize just being focused on Mag 7, which you see here, and be a little bit more diversified should something occur there. And we say, for these stocks, they're sort of priced to perfection, meaning that from here on out, everything has to continue to go perfectly for them. If there's anything that comes back negative from a sentiment, from a news, from an earnings perspective, you may see certainly a pullback. And we did see a little bit of that with NVIDIA over the last quarter. From a fixed income perspective, one of the things that you've heard us say is let's balance quality and yield seeking and credit. And that's exactly what we've done in your portfolio. We have treasury exposure, we have TIPS exposure, which today real yields are quite attractive, all else equal, meaning that the yield that you're earning post adjusting any kind of inflation are in the mid twos, which is, on the face of it seems like it's not very high, but it is actually quite high, all else equal. So we do have exposure there. And the one actually area where we opportunistically added last year was investment grade through the short-term corporate bond index fund. That was never meant to be a position that was in the portfolio for an extended period. It was meant to take advantage of widened out spreads. So the spread you earn over treasuries for corporate bonds. And as that's compressed, we've earned a very nice return. So, over just a little over a year, we've earned 8% in that position. So I think that's one when we go into 2025, we'll have to talk about simply winding down as well, and taking those returns off the table. For this slide here that you have on the page, as I mentioned, October saw a pullback. Not surprisingly, leading up to the election, there are a lot of questions of which way it's going to go. A lot of the polls were showing very tight races, 50-50. Uncertainty around markets, uncertainty around rates, what will happen on a go-forward basis. And really what that ended up resulting in is what you see on this page, a very volatile period.
Yeah, and Sebastian, what's your guys' outlook on Powell, the Fed, and the Trump administration?
Between the two of them?
Just, is there anything that Trump and Congress can really do to the Fed chair, and do we see some stability there for the next couple of years? Does he have another 2 years left on his term?
I mean, he's come out and said that he's not looking to resign or...
Oh, I know that, but I just wondered if you guys had an outlook on any type of influence on that.
Not directly. It's a tough one to call. I think if you look at the first term as any example, clearly, the executive branch tried to influence the Fed, even though there's supposed to be independence there. I think that pushback is correct from Fed Chair Powell's perspective. Again, he's doing what he's supposed to be doing in his seat. So, John, no direct answer as to what the expectation is there. I mean, anecdotally, if rates continue to decrease and get cut, I'm pretty sure the president's not going to complain unless he thinks it's too little. But I guess Twitter doesn't amount to a policy change on that front. But I think that's what it would be. It would be public friction more than anything else. I think the Fed will continue to be independent and do what they feel is best to support the economy, and that's what you expect from them. So no prediction as to what that looks like, but if it's setting up to be anything like it's setting up to be over the last couple of days or couple of weeks in terms of rhetoric, it's going to be pretty public, at least one-sided. So the rest of the pages here, there is a page with a lot of words on it, but the one right after this, that kind of gives you a sense of the areas that we're looking at, right? So what we know from the first administration and from what has been told to us thus far, these are the key areas we think will be impactful on a go-forward basis. Some of it could be sooner versus later. So the trade policy, tariffs, et cetera, that could be an executive decision that doesn't require Congress, congressional action. So those are things that could come much sooner than later. And again, it all depends on the scale and exactly how those look as to the impact to the economy. Immigration policy, this has a direct impact simply on the workforce and whether or not we have the individuals for some of the specializations that are out there across the board. Regulations and the regulatory pullback, this was a feature of the initial Trump administration, and one that's likely to be a key feature on a go-forward basis. This is something that has potential benefits as well, especially to more domestic small cap companies where, the regulatory environment being loosened up actually potentially helps out in terms of the support there. Furthermore, if you were reading the journal today or yesterday, there was this correlation of a little bit less regulation on the M&A market and the IPO market for private markets as well. So that's been a market that's struggled over the last couple of years in terms of distributions, et cetera, where this could potentially help open the door there to more activity. The tax and fiscal policy, the initial tax cuts that were enacted in 2016 or 8 years ago go through the end of next year. So there's going to be probably some work there to extend those further. But beyond that, we'll see what else is part of that. And then, John, your question was right at the bottom of that page. It's the independence of the Fed and what that looks like on a go-forward basis, right? That one is a little bit of a toss-up, and this one I can say my crystal ball is cracked on, so I'm not going to be able to really say what that looks like.
You got it. And luckily, he wasn't appointed by Trump. Oh yeah, he was.
He was. Yeah.
I'm joking. Yes. Good.
All right. So, all right. So I think we need to wrap it up so we can move on to the next bits of the agenda. Any more questions or anything else for Sebastian? No. All right. So Sebastian, we'll see you in the new year. Thank you so much.
Thank you.
Thank
We'll
you.
know more in the new year.
Thank you.
Thank you.
Bye-bye.
Bye. All right. No, go back for just a second. Just
Yeah.
this is a
Next one.
quick
Nope, next one.
next one.
There you go.
Who's driving? David?
Amanda.
Oh, Amanda.
Sorry.
That's okay. It takes a second. Every time you click it, it goes to sometimes if you try and do it too fast.
That's okay. All right. This slide is just basically a quick report out of where we're at with gift reports. With the gifts. Thank you for all the organizations, the affiliates, the funds, the friends. Thank you for everything you do to support the library. Any comments, Emily? Anything you want to call out here?
No, just a couple of things. It's about a $600,000 increase over FY23, and that can all be attributed to the fund. So they had some great transfers to the library budget last year, and those mainly focused on the nutrition lab, the books on band program, workforce development, and then just some general programming as well. Another question that comes up, these are all specifically financial donations that came into the library. So there are additional contributions, particularly from the friends groups that go directly to the branches, whether it's material or money for local programming. And we're looking to gather reporting on those contributions as well.
All right. Thank you so much. Next, Amanda. All right, the facade. Emily.
Yep. This next vote, there was a car accident. If you all remember back in May of 22, we had a vote earlier this spring for the purchase of the stone to repair the exterior work. This is a vote for the contract for the actual masonry work that's needed to take place to use the stone that we bought.
Any questions regarding this contract? No. Motion to approve?
But was that covered by insurance or no?
We didn't really receive, any insurance money through the driver, no.
Okay, how come? I mean, how much is the damage? I'm sorry, I don't have it in front of me.
It's 53,000.
How did we not, go after insurance on this?
We definitely reached out. I don't have the information, right in front of me.
That's a lot of money to give up that quickly. I don't know, I'm not understanding that. Was the driver insured?
I don't believe the driver was. I know there was an awful lot of work on this, and I just don't have the notes in front of me here, but I can follow up and send you all
All
of
right,
that.
do me a favor, that seems, is a driver of means or no? Do we know? Did we go to the registry? That's a lot of money not to get any insurance at all, so the car was uninsured.
I just want to get the facts to share with you all. I don't have that information with me right now, but I know it was definitely looked into.
All right, Evelyn, I'm okay with us going forward because it has to get done, but at the same time, I'd love to know more about an insurance claim here and exactly what the facts are behind it. If anybody's uncomfortable with that, but
Yeah, no, that's a reasonable request.
okay, yeah, if you don't mind,
For some reason, I think we talked. For some reason, I thought we talked about it, but no, Emily, if you could just send an email to this group, to the committee, and just basically state the facts of any insurance claims.
I definitely can. It was a very small policy. I just can't speak to what it was, but I can gather that and send it out to this group.
all right, thank you.
Okay.
All right, so I
Yeah,
need to
but
take a vote.
I'll approve it. Let's just follow up on the insurance aspect of it. Thank you.
I can, Evelyn, if it makes it more comfortable, I can certainly add in as you do this vote, pending,
No, I
No.
think we can,
No,
we
no,
can separate
the work needs to get done.
Right, exactly.
So we just approve it, and then we, in the back end, we just have to do the due diligence on getting information on what happened with any claims to insurance or anything like that.
Yeah. Because that's a
I
funding
think
source
it's like
question as
some-
opposed to an approval question.
Yeah, exactly.
Yeah.
I mean, I trust that you all did the due diligence, so we just need a report of that.
you want to take the vote?
So, motion,
So moved.
second?
Second,
All right, any in favor? I mean,
Yes.
everybody in favor? Any abstentions? Any no's? All right, there we go.
So moved.
So moved.
I made a note in the comments, but I just want to make it for the public record that Senator Rush has joined the meeting in the beginning. He was just in the public side and wasn't promoted during the roll call and the minutes.
Yeah, thanks, fam. I'm still, but by the next pandemic, I'll have this down pat, I promise.
Okay, I saw you, so I just wanted to acknowledge that.
No, I joined about 2 minutes late, but apparently I went to the wrong Zoom side, but I have been here the whole time. And again,
We've seen
100
you.
years from now, I'll have it down.
All right. Next is the fleet. We need a contract for the fleet of BPL vehicles. I'll let Emily explain it a bit. And this is we're gonna be making a request for the trustee board to defer this contract onto us so we could then vote for it. But Emily, can you explain?
Perfect, thank you. So the finance team has been working diligently over the past 6 months, trying to find a replacement for the fleet. It's 7 vehicles that the library has. We anticipate that the purchase of these vehicles is going to exceed $300,000. We just don't have all the information ready to make a recommendation right now. So we're hoping that this can be deferred to a special meeting in December. Any questions on that?
Nope. Anyone? No. Okay, moving on. All right, this one has drama behind it. So do you want to explain the drama first and then go to the vote?
We are asking basically for a policy inclusion. So right now, we don't have any policy around foreign wire transfers. The need for it primarily is around special collections purchases. So a lot of the items that we're purchasing for the special collections department are from overseas. And the city policy doesn't include allowance to use city funds for foreign wire transfers. Primarily, the special collections items are purchased through trustee funds and trust funds that we have here for the library. So we're asking for the ability moving forward to be able to execute foreign wire and ACH.
Yeah, this one is problematic. I sit on a couple of public corporate boards. The amount of wire fraud that's going on out there right now between, it's really sophisticated. I just dealt with one of our boards, a 7-figure with all the policies, procedures. It's really, it's really, these are big established networks and big established banks. And I just be really cognizant of your systems in place, who signs off and follow policies. But this is it's a massive area of fraud right now, no matter how sophisticated you are. So knowing the other person on the other side is really critical here, and having the risk management compliance procedures in place that has to be followed letter of the law is really critical here. Having just gone through it.
A couple of kind of backup notes for you all as well. When we're dealing with vendors, foreign vendors, and material for special collections, almost 100% of the time, we actually already have the piece in our possession. So they send it to us, we have it, we inspect it, and then we tell them, yes, we would like to go forward and purchase it. So we would already have it in our possession. When we wouldn't have it in our possession is when it's an auction house, so like a Sotheby's or something, which they have their own standard of practice in terms of transfer of ownership and payment for those. Obviously working with vendors that we have known relationships with, and the background that Evelyn was speaking to, we had an issue earlier this year, back in May, we issued a check payment to a UK vendor, and it still wasn't able to be cleared through the bank in October. So we were having an issues between our account and a Santander account in the UK. And we needed to pay this man for the scroll that we had purchased.
Yeah, so I'm with you on this. Just even with the big scam right now on wire fraud is from known vendors, known names, and all I'm saying is before that wire goes out, just double check, especially for an institution that does not have the deep pockets. And are we going to look at wire insurance just in case it ever did come up? It's not that expensive. Digital fraud and wire insurance is out there. We might be able to get amendment to our existing policy to protect us in case of loss or any fraud. That's all.
So John, do you want, since I know you're on the phone, and I don't think you're able to read this, can you?
Sure, no, I really can't. I'm so sorry.
No, you can't. No, that's okay. Because your experience is important in this. So if you don't mind, I'm going to read it real quick. And then if you tell me, I would love to hear feedback. If there's anything else that should be included in this language, we would appreciate it.
Thank you, Evelyn. Sorry for this.
No apologies needed. I appreciate your participation. Basically, it says that it recommends to the Board of Trustees approve the use of foreign ACH wire transfers to purchase select items that would be unobtainable through the use of standard payment methods. So we would go to a standard payment methods first. Foreign ACH or wire transfer option would include the following controls. Only utilize when all standard methods have been exhausted. Only utilize with vendors and auction houses deemed reputable. It requires electronic approval by 3 senior managers, excluding requesting personnel. Based on the conversation that we just had, and actually Emily, you mentioned that we wouldn't do a wire transfer unless the goods are in our side. Is that part of your purchasing policy? That's one question.
It's not, and I can walk through if it would be helpful. We've outlined the process of how we would operate this if it were to be approved. I can walk through that as well. I didn't want to include it all in the policy, but we have a separate written process that we would follow. With individual vendors, nearly 100% of the time, we already have the material. So they have mailed it to us. We have it in hand. The instances where we don't have it in hand is when it's an auction house, which those are much larger auction houses that we're working with. The issue is Sotheby's. Sotheby's, like in the UK, we wouldn't be able to pay Sotheby's here in the US. They're separated.
No, I get it. I get it. I guess, Evelyn, listening to that language, the only thing I would say is, you got it, something in there, and I'm sorry to do this to you guys, but something where the approval and procedures have to be followed and signed off by the most senior person in finance or in the library, at least. Because if they had followed policy on one of these, it never would have happened. The wire fraud, and it was to a vendor who they knew, but it was not a vendor. It was a scam, and all it was one letter off in the email. So that's how sophisticated it's getting now. So all I'm saying to you is, look, compliance risk, the language sounds fine, only if it's followed. And that's kind of the crux of it all. But I would say looking at a rider just for insurance is not a bad idea, and it's really cheap. So for digital and wire fraud, you may want to just look at that to protect yourselves, that's all.
The process piece on this too, it would initiate originally through our accounts with the on-site accounting manager. Once he has inputted, or once they have inputted the account information, it then kicks to 4 senior people. So it would be myself, David, Beth Prenda, who oversees the special collections, and then Pamela as well as an authorizer. 2 of those people would need to go ahead and approve the wire transfer by also plugging in the banking information. So they would have to enter it in the second time, and it would all have to match. And then separate from that, I know this doesn't help with scamming, but in terms of like internal controls, there's a bank reconciliation that would have to happen within 30 days as well. So that's a separate individual.
Yep.
And then the other piece too that I just think is worth sharing, the largest purchase that we've made in recent history was just under $90,000. Obviously we don't want to be risking that, but we're not talking about.
Okay.
I just want to note that Jeff Hawkins is going to have to jump, and he wanted to say something before.
You got it.
Yeah, sorry, I was just going to vote yes to allow this with all the caveats that John rightfully pointed out.
Yeah, me too. Thanks,
Right.
Jeff.
Thanks,
I
guys.
have a
Sorry, I
last-
hop early.
You can hop off. I just have a last question, Emily.
Mhm.
Did you review this policy with the auditors, and if those are the appropriate controls? Or did they have any additional suggestions?
We spoke with the city departments, and we spoke with citizens, who will be making in their government control office that we would be making these transactions with. So we took their, recommendations into account. We did not speak with our auditing firm directly though, no.
All right. I appreciate that. All right. So can I get a motion?
So moved.
Okay, second.
I can second.
Second.
All right. All in favor? Any abstentions? No. Any no's? All right. It's 4:59, people. We're done. All the votes have been acquired.
If I could just note the fleet of cars, if we do have that, the special meeting that I called for the strategic plan vote, if possible, I may add the fleet of vehicles being voted on by the full board at that December meeting so that we don't have to have a special.
That's fine.
Good.
That's perfect. Appreciate it. All right. Thank you, everyone. Have a good night.
Good meeting.
Appreciate
Thank you.
Great meeting. Thank you so much.
Thank you all.
Bye.
Bye-bye.